Home Depot shares dropping on weak guidance. Joining us now, Brian Nagel, Oppenheimer Company, Senior Equity Research Analyst. Brian, great to have you with us. You expected sort of an inline quarter. You expected sort of an inline guide. So what was the most disappointing out of this report?
Well, look, I think what we're hearing from Home Depot in the release this morning is that the backdrop is actually getting a bit worse here. Okay, and so that's disappointing. Now, the company will have its conference call at 9 a.m. Eastern. We'll obviously get more details. But again, this is very consistent with what we're hearing from a lot of other consumer companies and retailers, is that the demand backdrop has gotten worse. And Home Depot is clearly saying that here. My suspicion is that this demand backdrop probably got worse as the quarter progressed. This is a July quarter. So again, that's a disappointment. And then Home Depot is lowering its guidance for the balance of fiscal 24, reflecting, I think, this weaker demand trend.
Are you getting the sense, or do you get the sense, I know it's before the conference call, that maybe they're kitchen sinking for a reset?
No, look, that's a great question. And my sense is no. I want to make sure I say this clearly. I think Home Depot, like I say a lot on this show, Home Depot is an extraordinarily well-run company. Home Depot knows how to communicate very well with investors. Okay, but I think Home Depot right now in this guidance and these results is basically reflecting what's actually happening. I mean, my concern here, and the reason I stay on the sidelines with Home Depot and with Lowe's and frankly with a lot of retailers, is I think this sales weakness that we're seeing now is going to persist for a while. I don't think this is a short-term blip. And I think it very much persists through 24 and frankly into 25, because I think what's happening here is we're having this prolonged post-pandemic reset. Home Depot, the home improvement category, benefited significantly during the pandemic. Demand trends spiked higher. I think now we're just in that post-pandemic period. And again, the point I'm making is I think this is going to persist for a while. But I don't think their kitchen's sinking here, so to say. I think they're reflecting what they're saying.
Is there any hope on your part that with the drop in interest rates if there is more pull forward of cuts, is that going to speed the turnaround here, the inflection point for Home Depot and Lowe's?
Well, there's no question that over time, declining interest rates benefit housing and then benefit the home improvement sector, Home Depot and Lowe's. Okay, that will absolutely happen. Okay, my concern is it's just going to take a while to take hold. I look at it, if I step back and look at home improvement or the housing sector, I think we very much have a state of housing stagnation in the United States. And we need to get rates down to a point where that homeowners incentivized to move. I think we've got a ways to go. A 25, 50 basis point cut is right direction. Okay, but it's going to take a while before these rates get low enough to really incentivize that homeowner to move, to purchase that home, and to really break this housing stagnation we have in the United States.
Mm-hmm. The SRS Distribution Acquisition, you like that? A lot of people thought it was a little bit rich, but you thought it was interesting for the path forward. In light of the macro backdrop now, that seems like it would take a lot longer to pay off here. Not a well-timed acquisition.
Well, it's interesting. I do think they paid up for it. I mean, that's a nice way of saying I think they probably paid too much for it. Okay. Strategically, I think it's the right move. Home Depot's had this big push into the pro segment. I mean, what we're learning is the pro segment remains very fragmented. And I think acquisitions like this will be needed in order to sort of have Home Depot further penetrate various pockets of the pro segment. So strategically, I think it makes a lot of sense. I think they did pay up for it. But I also think there's a signaling. The question is, why did Home Depot make this acquisition now? I think one of the factors is that, they see continued weakness in the core business. And so they're looking to sort of say, how do we drive growth in our total enterprise if the core business, the DIY segment, the pro businesses they have, are going to likely stay soft?